Hey everyone, welcome back to Corporate Decoder, the place where we dive into the fascinating world of corporate filings. Today, we're cracking open a 10K, which is like a company's yearly diary, but instead of secrets, it's filled with numbers and legal jargon. Let's just say after reading this, you might need a financial dictionary and a strong cup of coffee. We're diving into Eterna Therapeutics' annual report, and it looks like they're facing a bumpy road ahead with some serious financial challenges that could make or break their future in the competitive biotech world. Let's start with something that's both good and potentially a headache. Their licensing agreement with Factor Bioscience. Basically, Eterna has a deal to use Factor's technology for cancer and autoimmune diseases. This is a huge deal because it gives Eterna access to cutting-edge stuff they need for their therapies. And there's always a but, this license isn't free. They have to pay Factor a lot of money every month, plus milestones and royalties if their products actually make money. If they can't keep up with these payments, they could lose the license, which would be like losing the key to their laboratory. And speaking of money, this is where the report gets a little scary. The report explicitly states Eterna needs a lot more cash to keep going, and there's no guarantee they'll get it. If they can't find investors, they might have to cut back operations, sell off assets, or even shut down. It's tough out there for biotech companies. To put this in perspective, let's look at their financials. These numbers are telling a story. They've racked up an accumulated deficit of over $231 million. Basically, they owe a lot more than they own. In fact, looking at one of their key numbers, their cash, the lifeblood of a company, is only at $1.7 million. That's just very little considering their accumulated losses. Digging a bit deeper, here's a snapshot of their income statement, showing where they are making and losing money. They had a revenue of $582,000, which is not a lot compared to their loss from operations of minus $15.6 million. Their net loss per share is also a big red flag. It's negative 326. It tells you how much money the company lost for each share outstanding, and that number is very high, indicating something isn't going right. Scroll net decrease in cash and cash equivalents grow. Now, let's talk about where their cash is going. Their net decrease in cash was minus $9.9 million. These numbers paint a picture of a company struggling to stay afloat. They're burning through cash faster than they're bringing it in. Scroll stem cell therapy is CAT's a relatively new field. Scroll, one of the biggest risks Eterna faces is that their technology is new and unproven. They're working on stem cell therapies, which is exciting, but also comes with a lot of unknowns. The FDA, the government agency that approves drugs, might be extra cautious with these new therapies, which could delay or even prevent Eterna from getting their products on the market. Adding to the pressure, there's a risk that Eterna's stock could get delisted from Nasdaq. This is because they're not meeting the minimum requirements for stock price and company value. If they get delisted, it would be harder to raise money and their stock price could plummet. Scroll 7 stockholders collectively own a significant percentage of our outstanding common stock. Scroll. There's also an interesting tidbit about their ownership structure. 7 major stockholders control a large chunk of the company's stock. This means they have a lot of power and could influence decisions which might not always align with the interests of other investors. Scroll it. I've previously identified a material weakness in our internal control over Financial Reporter. And if all that wasn't enough, they've had issues with their internal financial controls. They found a material weakness, which is a fancy way of saying they had problems with their accounting. While they say they fixed it, any future issues could shake investor confidence. On the bright side, the report does mention their risk management and cybersecurity. They're taking steps to protect their computer systems and data, and they are being assisted by consultants. However, they are careful to say they don't know about any incidents that could be harmful. Scroll directors kissed, executive officers, and corporate governance grow. A few changes in leadership might be noteworthy. They brought in Sanjeev Luther as their new president and CEO, hoping he can turn things around. They are also shuffling around some of their board members to bring in more expertise. Scroll code of ethics antithesis scroll. Scroll one positive thing is their code of ethics. They have an actual code. But like we mentioned previously, all of it will need additional funds to make any substantial progress. So what's the bottom line? Eterna Therapeutics is in a tough spot. They have promising technology, but they're facing serious financial headwinds and regulatory uncertainty. Their survival depends on their ability to raise more money and navigate the complex world of biotech approvals. This is really more of a turnaround play. While the stock price might pop occasionally, the risks remain immense. Considering those heavy losses, the reliance on one agreement, the possibility of needing to raise, and the risk of potential delisting. Thanks for watching. If you found this breakdown helpful, hit that like button, leave a comment and subscribe for more in-depth corporate analysis.